Federal employees ask this all the time. When I retire, do I lose my health insurance? If that question has been nagging at you, you're not alone, and in the next few minutes, I want to give you a clear answer so you can stop worrying about it. So let's start with the bottom line. If you've been enrolled in FEHB for at least 5 years before you retire, and you're retiring on an immediate pension, you keep your health insurance for life. That is what people refer to as the 5-year rule, and it's the key to staying covered into retirement. Now that phrase 5-year rule can sound a little fuzzy, so let me unpack what it really means in plain English. When we say 5 years, we mean continuous coverage under FEHB for the 5 years right before your pension starts, or from your first opportunity to enroll if that is less than 5 years. You do not have to stay in the exact same plan for the entire time. You can change plans during open season and still meet the rule as long as you're always covered under FEHB or as an eligible family member. Now, in some cases, time covered under TRICARE or under a spouse's FEHB can count toward that requirement as long as you're actually in FEHB on the day you retire. So if you're thinking about retiring in the next few years, one of the smartest things you can do is simply check, am I in FEHB right now and have I been in it continuously? If the answer is no, that's your signal to get enrolled and keep it steady so you don't miss out on this pretty awesome benefit. Now, once you qualify, the next question is what actually changes when you retire? The first thing that changes is how you pay your premiums. While you're working, your FEHB premiums come out of your paycheck, usually on a pre-tax basis. When you retire, those premiums are typically taken out of your pension, and that is after tax. The important point here is that the basic premium for your plan does not suddenly jump just because you retired. The plan doesn't punish you for becoming a retiree. What does change is that you no longer get that pre-tax break in the same way, so it can feel a little different in your monthly cash flow. A second change is the timing. As an employee, you're used to seeing deductions every 2 weeks from your paycheck. As a retiree, those FEHB premiums come out of your monthly annuity payment. So over the course of the year, you're paying for the same coverage, but it shows up on a slightly different schedule, which is something that we want to plan for in your retirement budget and cash flow. Now, it's also worth remembering that FEHB premiums can go up over time for everyone, both workers and retirees, and that's just because healthcare costs in general tend to rise from year to year. That's not a retirement penalty, that's just the system adjusting over time. Now, the key thing is that retiring by itself doesn't make your specific FEHB plan more expensive than it already would have been. People also ask about dental and vision, so let me touch on that real quick. If you're enrolled in FEDVIP for dental or vision when you retire, you can usually continue that as well. There's no 5-year rule for FEDVIP. Just like FEHB, the deduction typically shifts from your paycheck to your annuity, but the idea is the same. Your coverage can follow you into retirement. Now, on the other hand, if someone retires without meeting the 5-year rule for FEHB, that's where problems start to show up. In that situation, FEHB doesn't simply stay with you for life. You might have a short extension or a temporary continuation option, but you're often paying the full cost of the premium plus an extra charge, and that can get very expensive very quickly. That's why dropping FEHB late in your career to save a little premium can turn into a very costly mistake if you plan to rely on it in retirement. So here's the main takeaway I want you to walk away with today. If you have had FEHB for at least 5 years leading up to retirement, and you're retiring on an immediate pension, you don't lose your health insurance. Your coverage does not stop, it doesn't shrink, and it doesn't get replaced by something worse. You earn this benefit over your full federal career, and as long as you meet the rules, you keep it into retirement. Now, if you're within a few years of retirement and you want to double check your FEHB timeline, see how it fits with Social Security and Medicare, and understand what your health premiums will look like in your actual retirement budget, that's exactly the kind of planning I help federal employees with. You can use the link below the video to request a quick retirement checkup, and we'll walk through your specific numbers together. And after you do that, I'd encourage you to watch this short video right here on how FEHB works with Medicare at 65 and whether it makes sense to add Part B or delay it. In just a few minutes, I'll walk you through how FEHB coordinates with Medicare, who usually takes Part B and who usually waits, and a simple example of a 65-year-old couple comparing FEHB only versus FEHB plus Part B. If you're anywhere near 65, that video will give you a lot of clarity before you make any permanent decisions. So go ahead, click here to watch, and I'll see you over there.